It's another business week. Welcome to Business Morning. I'm Chimeze Obi. We'll begin with global oil market update as prices gained more than 2% this morning, with Brent futures rising above $40 a barrel after Joe Biden clinched the U.S. presidency and board risk appetites, offsetting worries about the impact on demand from a worsening coronavirus pandemic. Brent crude futures for January climbed $1.06 to $40.51 a barrel, and U.S. West Texas Intermediate crude for December was at $38.21 a barrel, up $1.07. Oil recovered from a 4% decline on Friday, rising along with other financial markets after Biden emerged as the winner in the U.S. presidential race. Meanwhile, the dollar weakened, boosting commodities priced in the greenback as they became more affordable for investors holding other currencies. U.S. President-elect Biden and his team are working on tackling the worsening health crisis. The United States became the first nation worldwide since the pandemic began to surpass 10 million COVID-19 infections. Separately, U.S. oil production is set to climb as producers are tapping into a backlog of drilled wells left uncompleted to boost output. The number of operating oil and gas rigs in the United States rose for an 8th week last week. Key members of the Organization of the Petroleum Exporting Countries are wary of Biden relaxing measures on either Iran or Venezuela in years to come, which could mean an increase in production that would make it harder to balance supply with demand. Okay, amid the changing global trade dynamics, the need for countries' competitiveness is becoming more and more compelling for trade and investment flows, especially into African frontier market countries, with the recent glut in the global oil market and its attendant impact on Nigeria's foreign exchange administration. Trade and capital flows into the country have been affected despite the country being in dire need of critical foreign direct and portfolio investments to fix critical infrastructure projects. Nigeria Investment Promotion Commission is government's body saddled with the responsibility of facilitating investments in the country, a task which appears daunting, especially at this time, given the effect of COVID-19 on global funds flow. I have joining me this morning the Executive Secretary and Chief Executive Officer of NIPC, Yewande Sadiku. Thank you very much, Ms. Sadiku, for joining us on the program.
Thank you, Chimeze, for having me.
So how challenging is your job at this critical time in history, given all of the issues around COVID-19 pandemic, NSAS protests, and slowdown in capital flows into the country in recent times?
What was a challenging job has become more challenging by these activities. The NSAS protests highlighted a need for, a social awakening in Nigeria. And then the violence and needless destruction of public and private property after it gave concerns to many investors. The way I see it, because of the challenges, that many investors talk about investing in Nigeria, it's important that all of us continue to give them comfort with the prospects of Nigeria as an investment destination. I actually believe those prospects remain strong, and I believe that is why we will continue to see investor interest. But we also need to continue the difficult work of making them comfortable. For me, what the NSAS protests and the violence that followed it, what they show is that we need to think slightly differently about the type and nature of investor engagement and investments that we have. It almost, for me, highlights the need to attract investments that have very, very high job creating impact and investments that have a large social impact. So probably now more than ever, we need to focus more attention on attracting impact investments and making sure, that there is a good spread across Nigeria's 36 states and the FCT.
Now, when you talk about attracting impactful investment, what's the role of NIPC in all of these?
NIPC was created really as an advocacy agency. Its legal mandate is to encourage, promote, and coordinate investments in Nigeria. But the things that investors need to get comfort first and then to actually make a move to invest are obviously beyond the capacity of one agency. So I see investment promotion necessarily as the job of all of government. And it is government at the executive, at the judiciary, and the legislature. It is federal, it is state, but it is all government agencies together. I mean, you mentioned, the social issues that we recently dealt with, the comment about security, the comment about policy, the comment about exchange rate. All of these are not within the control of any single agency. So it's the pooling together, it's the consistency and the thinking of government policies really is where investors draw comfort. But primarily our job in NIPC is, as I said, encouraging, promoting, and coordinating. We try to get as much data as we can to guide the work that we do and to use the information that we garner from our engagements with investors to help government agencies, with the, if you like, the voice of the investor, so that decisions that are made, so that policies and the like are better tweaked to investors' preferences. But investment promotion, really is an all of government approach. That's the best way to achieve success.
Right. Okay, talking about the NSAS protests, for instance, we saw the amount of destruction, that occurred during that protest. And of course, mainly in Lagos. And we know that Lagos remains the choice investment destination. So having seen this quantum of destruction due to NSAS protests, do you see that changing the narrative for Lagos State?
Before I respond to your question, I'd just like to say that from where I sit, from what I see, the NSAS protests themselves were actually largely peaceful. There was no destruction as a result of the protest, but the violence and the looting that followed it is what caused the destruction. It followed the protest, but I don't think that it was, it was the same as the protest. Now, what it underscores, Lagos in terms of development in many ways was well ahead of many parts of Nigeria. And the nature of investments that Lagos needed was different from the rest of Nigeria because of the level of development and infrastructure that Lagos had. The destruction that followed the NSAS protests had taken some of that infrastructural development back somewhat, and obviously has affected a lot of entrepreneurs, a lot of private people, who were running businesses in Lagos and providing jobs. So the kind of support that Lagos needs is different now from before. And I think the fact that, this spread across Lagos, as I mentioned, also underscores the need for impact investment. It is relevant in Lagos as it is relevant everywhere else. But the need to have the sort of investments that create meaningful jobs for young people. And the kind of jobs that are required, will be different for the different states and across Nigeria. If I can just, give an example, agriculture is deemed to be that sector that generally provides the highest, that generally has the highest impact on job creation. But the kind of jobs that agriculture provides, the largest quantum, will be jobs that have, fairly low skilled and that attract or that provide wages, that are not as high as you would get for jobs in manufacturing, as you would get for jobs in the service sectors, as you would get for jobs at the very high end, where you have jobs that have that require a high degree of intellectual capacity. The jobs that have a high degree of intellectual capacity will pay the most in terms of wages, but by nature, there are only a handful of them. These will be jobs in the tech space, these will be jobs in the financial sector, jobs in oil and gas and the like. We need jobs across the entire spectrum, but we probably now, more than ever, need to pay a lot more attention to creating, large number of jobs in that spectrum between agriculture and manufacturing.
Experts have argued that, when we talk about capital flows, to a large extent, it depends on how aligned with market realities your foreign exchange policy is. Do you agree with that? Hello, Ms. Sadiku, can you hear me? Well, I'm talking about the fact that experts argue that capital flows to a large extent depend on how aligned with market realities your foreign exchange policy is. Do you agree with this? Well, I think we have lost some kind of connection with Ms. Sadiku there. We hope to reconnect to her. But in the meantime, let's look at what the budget defense session talked about this weekend, nearly 1 month after President Buhari presented a 13.08 trillion naira 2021 budget to a joint session of the National Assembly. Parliament has begun holding budget defense session with heads of government agencies. Now, this year's session has been marked by worries of inadequate funding for government agencies because of revenue shortfalls worsened by the COVID-19 pandemic and its effect on oil prices.
The yearly ritual, where heads of government agencies engage with the National Assembly to defend their budgets, has been ongoing in the last 2 weeks and is expected to continue till the end of November 2020. This year's budget defense sessions are similar to previous years. Heads of each agency presents the previous year's budget performance to the Oversighting Committee for scrutiny and then justifies the expenditure for the next financial year. A recurrent theme in the session so far are complaints of poor funding in the previous and subsequent financial years.
We are grossly underfunded. I am being honest. We are being treated like any other MDA.
Every ministry, department, and agency that you meet will tell you they haven't got the resources that they need. Why is it so? It is so because resources are simply short.
Simply put, Nigeria has a dire problem of revenue shortages, and with a budget deficit of 5.2 trillion naira, there are concerns of the country's ability to fund the 2021 budget.
Deficit that we have is a difference of what we have available and our intention. So, like we said, if these deficits we have enough naira cover, our deficit will be reduced. And the only way to reduce it is for us to make collection.
To ensure that
the chairman, Senate Committee on Finance, maintains that one way of generating revenue is to reduce the cost of governance, while his colleague in the Public Accounts Committee advocates effective audit of the accounts of MDAs to block leakages.
we need to reduce these agencies. And I'm of a strong opinion that if we bring it down from over 600 and something agencies to like 200 or 300 agencies, that will drastically reduce cost of governance by more than 30%. Now, on the issue of the revenue generating agencies, that is one way that we can cut down these leakages we have been seeing from all these revenue generating agencies. For those that are funded from the federal budget, if you have generated enough that can make you to stand on your own, I think it is better for us as a government to pull you out of the government funding so that you can stand if you really want to exist.
No nation talked about budget when the preceding year audited accounts have not been adopted. No nation. So, because all these ones add to leakages, that's the point I want to make. I can spend, I can always come and collect another one. You are not entitled to another one when you have not given account. After all the establishment acts, all the laws establishing all these agencies, go to them. You will see under audits. It's written there. Your account will be audited 6 years into the new financial year. 6 months into the new financial year.
Development economist Professor Kenife proposes a way the federal government can promote fiscal discipline.
The 2007 Fiscal Responsibility Act says that within 90 days of going into force in 2007, the president should set some ratios. External debt to GDP ratio, domestic debt to GDP ratio, deficit, debt service to revenue. And where you don't have this set, there's a lot of fiscal indiscipline.
The National Assembly, which has the power of the purse, has an integral role to play in promoting fiscal discipline by effectively oversighting government agencies, particularly the revenue-generating ones, as well as passing the Fiscal Responsibility Act 2020, which will empower the Commission to advance fiscal prudence in government agencies. Linda Akibe, Channels Television News.
All right, I'm being told now that Ms. Yonde Sadiku is back to us. Thank you very much, Ms. Sadiku, for sticking on. Well, sometimes technology can actually disappoint, but that's okay. Anyway, foreign direct investment is one of the critical areas I believe your commission is seeking to work on improving capital into the country, but it seems the situation has gone from bad to worse. What more can be done to change this narrative?
Foreign direct investment inflow in Nigeria has been under some pressure for a number of years. COVID-19 and its impact on FDI flows globally obviously will have an impact on that. In the first half of 2020, what we've seen globally is a reduction in FDI levels of about 50% as a result driven largely, by COVID-19. When we look at the periods when Nigeria has attracted the greatest FDI, if you look over the last 20 years, the greatest FDI has been attracted into Nigeria when government policies, when there were economic reforms in sectors that opened up the economy. So the sharp periods, that we see high FDI attraction related to the sale of oil and gas assets to indigenous companies, the mobile telephony revolution, and then banking, the reform in the banking sector that created new avenues for investment. We think in NIPC that similarly bold government policies will be required to attract investor attention and reverse the trend. And we also need in those sectors, that will drive investor interest and investor inflow. But it is important that the policies be coherent, that there's a thread that runs across them that gives investors comfort. It is also important that stay sufficiently stable for long enough for the investment horizon, particularly that direct investors take. Direct investors and portfolio investors have different investment horizons, and it is important that whatever we give comfort to both.
Well, Ms. Sadiku, I guess today is not one of those days that technology would actually be nice, but it's okay. We got what you are saying. Thank you very much for being on the show with us. Yonde Sadiku is the Executive Secretary and Chief Executive Officer of NIPC. We'll take a break, and when we come back, Joe Biden, U.S. President-elect, what does it mean for Nigeria-U.S. relations? That's our conversation when we come back. And after nail-biting night, Joe Biden was announced the president-elect of the United States of America over the weekend, making him the 46th president. Expectedly, his economic policy positions will have far-reaching effects globally, including Nigeria. And so what would Nigeria-U.S. business relations would be like under Joe Biden? I'm being joined by the CEO, Economic Growth and Development Council, Professor Magnus Bako. Thank you very much, Professor Bako. Thank you for joining us on the program.
Thank you, Chimize. Always a pleasure to be with you.
So U.S. election not over, but we have a direction as Joe Biden having been announced as the president-elect. What can Nigeria expect from Joe Biden?
Well, that's pretty good. I think that, first of all, we had an extraordinary election in the United States like never before seen. And I think that after that, obviously people expect, changes, something really different from what obtained before around the world. I mean, the election was extraordinary as it was riveting. But as far as for Nigeria, I don't think that Nigeria or Africa should be sitting down to try to see what policies President Biden will have for Africa or for Nigeria, because Africa or Nigeria, we are not a state of the United States. We're not a constituency. So what it is that we have to be ready to develop our own strategies, our own policies to be able to engage Joe Biden. President Biden, when he becomes president, as you know, is well-versed in international relations. He started off in the Senate at a very young age, in his 20s, and then became chairman of the Foreign Relations Committee. So I think that he understands the world very well. And then he has a vice president that also has a very good understanding of the world. So that makes it a little bit easy for Africa and for Nigeria to engage that kind of situation. So I think that what we need to do, we have competence in Nigeria to start off. We have some people that, for example, the foreign minister, Jeffrey Oyema, my good friend Jeffrey Oyema, I think is quite competent. I think we have the right person there. He's been doing a good job, and I think that he will do well to engage this incoming administration. We have somebody like Professor Ibrahim Gambari, who is extremely, extremely competent, understands the global situation as well as anybody. So we have the competencies that we need in Nigeria to engage the new administration. But I think that it goes a little bit beyond that. To go engage them means that we are prepared ourselves. So that means that in Nigeria, we have to set up the social infrastructure, the investment infrastructure. And what that means is that we have to drill down to the grassroots, to our small and medium enterprises. I think quite often people misunderstand investments, international investments. It is not to be done top down. Except in trying to provide a good environment. But in terms of practical activity, it has to be bottom up. We need to now prepare our people in the local government areas. I've been trying to see how we work with local governments, to partner with the world. So we have to prepare that, make sure that our guys have ways of engaging people in the United States. It is very difficult to have a good trade relationship with another country if you don't have a very good social infrastructure, international social infrastructure to work with. What I mean by that is that you need your own people, your own grassroots people, your own small and medium enterprises to engage enterprises on the other side. But that happens through relationships. And when that happens, then the policy arrangement at the top can begin to make sure that things work well, that things are impactful, and that we get the results that we want. But I think it's not enough for somebody to just rush to Washington and have a meeting and come back. I think what it is, we need to get our people to be ready to see how you can engage their counterparts in the United States. And I think our people are very ready to do that. If I may even add something else, you work from the things that you have in your hand, as I often say. What are your endowments? What do you have? And Nigeria has critical endowments. We have natural resources endowments, especially oil, although the United States also produces shale now that is competitive with us. But we have also human resource, which is perhaps the most important resource that you need to have. And that's been helping the country quite a bit. We're getting near $24 billion in remittances into the country because of our resources in the diaspora. Very close to the budget you just mentioned, 13 trillion budget, about $32 billion from the federal government. So if you look at the resources that you have, the endowments that you have, the question is, how do you work these endowments? How do you refine these endowments to make them to be ready to engage what you want to engage in the United States. And then of course the other thing is you've got to have a good environment. People have to trust you to do business with you. You have to be transparent. You have to have energy. You have to develop your human capital. You've got to have the skills to get your people ready to do business in a transparent and honest way. Even President Trump, I believe, in his Prosper Africa initiative, that's what he really talked about, that he was ready to work with African countries that are transparent and are ready to do business.
Okay, Mr. Bako, let's look at Nigeria business relations at the moment. How would you describe this presently, especially under the Trump administration?
Well, I think that it's the same as, in my view, the same as it has always been. I think that the United States is the most important country outside of Africa for Nigeria to work with because we have natural ties with the United States. I think the United States is far more important than some of the other countries that we've been looking at very seriously. I'm not saying we shouldn't look at them, but I think we should always be looking towards the United States because they have the largest market in the world, the largest consumer market, and we have cultural ties with them. We have a huge Nigerian-American population. We have a huge overall African-American population that we have not been leveraging, and we can develop real, very good tentacles in the country using these facilities. So I think with President Trump, obviously with his America First strategy, is clear what he wants to, or what he's always wanted to do is to be sure that he works for the interest of the United States. And there's nothing wrong with that. That's what any president should do. I think that, in my view, we could have engaged President Trump a lot better than we had so far. Because he's not there to develop policies for Nigeria. He's there to take care of his own country. And he's, as I mentioned earlier, he's come up with this Prosper Africa initiative. And I think that if he were to continue as president, then it would have been up to us to see how we engage that Prosper Africa initiative. We had President Obama, and I think that, as far as I'm concerned, that we did not engage President Obama as well as we could have across Africa. Oftentimes, our leaders wait and see. And you should not wait and see because there's nothing to see if you wait. So we have to be ready at all times to see how we develop our own strategies for engaging these market superpowers, be it China or the United States or Europe. So I think that the President Trump, he was ready to do business with us if we're ready to do business with him. Of course, he has his own unique ways of doing business, but it's up to us to develop strategies to engage his ways.
Right now, so do you think that Biden's presidency will change the narrative?
Well, I think that President Biden will try to change some things. You know, there were certain presidential orders. There were, as we all know, executive orders. There were pronounced by the Trump administration. I think some of those might change. For example, some issues concerning immigration. I suspect that there will be some changes given the nature of the president-elect. As I said, haven't been very conversant, you know, with global affairs and chaired the Foreign Relations Committee in the Senate of the United States. And then looking at the background of Kamala Harris, whose father, we can say, comes from Africa by way of Jamaica, and then, of course, also India. So I suspect that she has a lot of linkages there and understands the world a little differently. So I suspect very strongly that President Biden and Vice President-elect, of course, Harris, will look at things a little bit differently. I'm pretty sure that they will be slightly different in their orientation towards Africa than we have seen with President Trump.
Now, the Asian countries seem to be doing much more in investment in Africa than the United States and Europe. What's your take on this?
Well, if you're saying Asian, you're talking particularly China.
China.
But yeah, of course, it is true. And I think that what it is that every country is looking for their own interest. And so when a country like China comes to Nigeria or Africa, I'm not sure. In fact, I know for a fact that it is not it's not through their benevolence that we are going to see any good things happen in Africa. I don't think that they're coming to benevolently take care of Africa. I think that they're coming in their own interest. But I think that, as I said when I opened up, I think that we should do business with these Asian countries, but we should be careful because they are here for their own interests, and we have no natural ties with them. We don't have very good social infrastructure with them. Our social capital network with these Asian countries is limited compared to what we have with the United States. As I mentioned, we have a huge diaspora population. We have historical ties there. And trade does not happen in a vacuum. Trade happens through relationships. And I think we have very good relationships with the U.S., and we will continue to have that because of the natural arrangements that exist. But with China, we can develop these relationships, but we should open our eyes wide and be sure that we know what we're doing. In the early days, before the slave trade, when the Portuguese came, they came to trade with us at first, and then they captured us and took us as slaves. So, when somebody comes to trade with you, you should be careful and watch them so they don't capture you. And the reason they capture you is because they have no natural relations with you. You don't have that sort of social arrangement. But I think that with the United States, for example, I don't think we should be too much afraid of being captured because we have natural ties and relations there. I think we should continue to trade with the Asian countries and work with them. Most of them used to be developing countries just like us. Some still are. And I think there's reason to work with them. There is a potential to work with them, but I think our eyes should be very open.
Professor Bako, AGOA was a major opportunity for Nigeria and Africa to take advantage of the U.S. market. How much impact did AGOA have on Nigeria-U.S. business relations?
Very little, very little. That's a very good question. I think that AGOA is a facility that was there for Africa to leverage. And I used to do some work with the guys working in the AGOA office in Washington. And I found that Nigeria was quite deficient in leveraging that facility. And I think if President Biden will extend the AGOA arrangement for the next cycle, probably up to 2025. It is a fantastic opportunity for Nigeria and other African countries to export into the United States. But we are not really taking advantage of it. If you go around and ask people, you'll be hard-pressed how many people even know there's something called AGOA. So this is, I think, with President Biden coming, I'm pretty sure that given the disposition of the Democratic Party, that they will be more inclined to extending AGOA, and then it's up to Nigeria to develop the wherewithal to use it. I think that's an important facility. But you can't do it if you don't develop your small and medium enterprises. So when we said AGOA before, what we were mainly selling under AGOA is crude oil. But that's not really what AGOA is for. AGOA is for regular products like shoes, like apparel, and things like that. So we like processed agricultural products. I think we should begin to make sure that these things have very good quality, that they are globally competitive, which we have the capacity to do. So if we do that and we show readiness and we show transparency and we show honesty and we show integrity and we show competence, then people will work with you on our goal. I think Nigeria has to stand up. I mean, as the giant of Africa, you should see a big readiness on the part of Nigeria to engage AGOA or any of these things far better than some of the other countries. So I think this is a great opportunity, and the President Biden coming, I'm sure, would want to work in that area with Nigeria.
Now, Professor
and, of course, the
Bako,
rest of
a quick
Africa.
one, Professor Bako, a quick one before I let you go. We really don't have much time here. But do you think we have the AFCTA now coming on board in January? So will this change the narrative in respect of business relations between Nigeria and the United States?
Well, it shouldn't. I mean, the way Africa has tended to work, Africa wants to come together, and that continental arrangement is fantastic. I think that quite often Africans go, and we've seen this in the EPA arrangements with Europe, the Africans tend to go as individual countries, and the European Union has tried to force that sort of arrangement upon Africa where they will deal with countries individually. And there's no way that you can deal with Europe individually. The trade situation is tilted in their favor. Also with the United States, I think if African countries can come together and approach the United States and tell them about what they have and sell their continental free trade arrangement with the United States, I think it's a good opportunity to do well. But never forget, in spite of all of that, I know every country is going to try to find their own ways of being the preeminent trade partner, in this case, say, with President Biden. Under Trump, only 2 African countries that I remember were invited to see President Trump in the White House. That would be our President Buhari and the President of Kenya. I think that Africans should do well to arrange themselves, invite President Biden to come to Africa for a meeting. I think we should not always see our presidents rushing overseas to go see some president and competing amongst themselves. I think we can get united, get strong, show gravitas, show that we are strong internationally and show that we are coming up, and then invite these countries to come visit with us and discuss how we can do business
All right,
together.
Professor Bako. Well, let's just hope that President Buhari will invite Biden this time around. Thank you very much for sharing your thoughts there. Thank you for your time. Yeah, Professor Magnus Bako is the CEO, Economic Growth and Development Council. All right, we'll take a quick look at the equities market with Edidion Ewang. Eddie, good morning.
Good morning, Jimmy. Well, the bull run continued in the markets last week, and that was for a number of reasons. One being the impressive Q3 2020 performance of listed companies, and the second being the low yield in the fixed income space. Now, that drove the market up by 1.56% week on week to 31,000 and 16.17 points. Well, joining me now to talk more about the market is Rotimi Fakayejo, a stockbroker. Good morning, Mr. Fakayejo. Thank you for joining us on the program. Mr. Fakayejo, if you can hear me, as Q3 earnings season, begin to wind down, what should we expect investors to turn their attention to now?
Well, it's very apparent because with the low income, coming from the fixed income securities, the low earnings, I think it's quite evident that is a consequence that we are seeing in the equity market. And this likely will continue because of the extent to which the equity market has moved in the last 3 months. For instance, the year-to-date position of the market is above 15%, and the trajectory is definitely going to be much more than this by the time we drop close to the end of the year, provided there is no further lockdown of the economy. And for me, I believe strongly that the fixed income market is definitely supposed to take its toll on lending. I mean to have a consequent effect on lending, but we have not seen that yet. We have not seen the lending rate coming down significantly. So, but for me, as far as it is right now, the loss of earnings or the downward trend of the earnings in the fixed income securities is definitely a huge gain for investors in the equity market.
Mr. Fakayejo, insurance companies are asking NICOM to waive the December 31 deadline for the first phase of the recapitalization exercise. Now, if that doesn't happen, what happens to stocks on that counter?
Well, it's definitely going to be a very, very negative impact on them, because with the way things have gone on this year, I believe NICOM should just give them a second thought and maybe give further elongation to the expiration of the deadline they have given to them earlier on, because it's definitely going to impact on them. And the implication of that is that many of them will be forced out of the market, and the kind of merger and the merger process is always not as fast as it seems. And you need to know a lot of things, do your due diligence before you can go into merger. So now that most of them have not been able to raise funds to actually push up their capital, then definitely it's going to be a very, very negative trend for that particular sector of the economy. So I would rather say that the NICOM should at least take a human look at what is happening and still grant them further extension of the deadline.
All right, Mr. Fakaijo, thank you for your input on the program. Rotimi Fakaijo is a stockbroker. We'll have to leave you there on the market review for now, but I'll be back later with you, Chimi.
Absolutely. We'll take a break, and when we come back, of course, I'll talk to Juliana before I get back to you. And for updates from the streets of London, we have Juliana Olayinka. Good morning, Juliana. Well, Joe Biden's win in the U.S. election saw Asian shares bounce this morning. How are markets in London waking up to a new business day with Biden as the U.S. president-elect?
Good morning, Chimese. Well, we followed the rally that we're seeing across the globe, and the FTSE's opened pretty strongly at early trading. I think just a few minutes in, it was already up by 1.36%. That's the FTSE 100. There is lots of elation across the world as investors are starting to see that perhaps this stimulus that they've been waiting for to help ail the fledgling economy in the US will actually go ahead. So pretty much all round happy. So the FTSE 100 and FTSE 250 all in positive territory at early trading.
And many believe Boris Johnson will be under even greater pressure to strike a Brexit deal with Brussels when Joe Biden enters the White House. What are you hearing regarding this?
Well, yeah, this has been an ongoing discussion for the past couple of weeks. I discussed it last week on my show, Channels Business Global. But really, I think it's because we know that Biden has this Irish ancestry. Biden has been pretty outspoken about not being comfortable with Boris Johnson ripping up parts of the withdrawal agreement. And there are some suggestions that Boris Johnson has already put a spanner in the works of the relationship, because he has been speaking over the weekend and he does plan on making parts of that internal market bill into legislation. So there are some concerns that perhaps a UK-US trade deal may be unlikely in the first couple of months if Biden isn't happy with the way the Brexit transition is going. But we can't forget that there are so many common priorities and common visions between the UK and the US, and that doesn't change depending on who the Prime Minister or the President may be. But I think it has become common knowledge that the relationship isn't as strong as it was after World War II, as people are becoming more domestically focused, less internationally focused. And we do know that Joe Biden will have an in-tray that's pretty full before he does start thinking about the UK. But climate change is a massive issue. The Iran nuclear deal is also a massive issue. There are several issues where there are common interests for both Biden and Boris Johnson besides Brexit. And Brexit, of course, is going to be happening in the next couple of weeks before President-elect Joe Biden is officially sworn in as the 45th president.
Well, it's a new week. What's on the radar for us to watch?
Well, it's a busy corporate week. Of course, the past couple of weeks, everybody's been focused on what's going on across the pond. But here we are expecting a couple of big corporate updates. First of all, as we were just speaking about Brexit, Michel Barnier, the EU's chief negotiator, arrived in London for more negotiations. We were expecting that perhaps a trade deal would be finished by the end of last weekend. That isn't the case, so there'll be lots of sound bites coming out of those debates. We're also expecting corporate updates from ITV, the television company, WH Smith and JD Wetherspoon, the pub company. So lots of corporate updates to keep you occupied. And of course, there's perhaps going to be more sound bites from the incumbent Donald Trump.
Well, we'll hope to get more updates from you later in the day, Juliana. And back here on the debt and currency market, Eddie, back to you.
Thank you, Jimmy. Just before we go to the fixed income markets, let's take a look at the unlisted securities markets. Unfortunately, those positive sentiments from the equities market did not spill into this segment of the market, as the NSI was down 1.49% at 719.31 points, while the market capitalization was at 528.38 billion naira. We saw just about 573,357 units worth 116 million naira traded in 19 deals. Now, the bond market started last week on a relatively quiet note, although it was bullish. But then towards the end of the week, we saw pockets of demand on the long end of the curve, you know, with yields improving and declining on average by about 24 basis points. We had 43 deals on that counter on Monday worth 19.50 billion naira. The Nigerian Treasury bills market was also quiet last week and ended the week on a bearish note as yields yields advanced by about 10 basis points. Now, on Friday, we could see that there were less deals on that counter. There were just 4 deals worth 6.02 billion naira. Now, most of the activity we saw at the Treasury bills market was mostly in the OMO market. Now, we saw investors paying attention to the mid and the long end of the curve. We had 51 deals worth 58.37 billion naira. But let's talk to Ladi Bello, a fixed income dealer at Access Bank, for more. Good morning, Ladi. Thank you for joining us on the program.
Good morning. Thank you for having me.
So this week, the CBN will be rolling over about 147.8 billion naira of maturing bills. How is that going to shape trading for the rest of the week?
Well, the DMO intends to roll over some of its maturities today, on Wednesday, to the tune of about 148 billion. In the grand scheme of things, it's not a lot. The amount outstanding or the volume they're willing to issue is not that significant. It can be absorbed pretty quickly in the market at the moment, since there are limited investment in terms of both OMO bills and Nigeria Treasury bills available in the market. At the last auction, we saw stop rates steady declining when compared to the preceding auction. So as it stands, we're seeing all of the NT bills in the market trading at comfortably below the 1% handle. The long end of the curve, that's the 364-day maturity, closed at 0.98%, at the last auction. As such, I don't believe, or we don't, based on our anticipation, we don't see the rates trending upwards. We're seeing a downward trajectory in the past couple of trading sessions, and that's what we expect to see at this auction. We expect for the long end of the curve, the same maturity to be heavily oversubscribed, given the increased yield capacity or advantage you have by purchasing in the primary market. So it's an easy arbitrage opportunity in the event that you want to sell your securities. But for the most part, given the limited investment outlets, like I said, counterparties, both local and offshore counterparties, prefer to hold their securities at the moment.
All right, Ladi, thank you for your input on the program. Do enjoy the rest of your day. Ladi Bello is a fixed income dealer at Access Bank. Well, Chimi, with the yields continuing to decline at the fixed income space, I just see more investor sentiment at the equities market.
Absolutely. Well, it's given. So investors will want to go to where they would, gain. Nobody wants to lose, isn't it?
True. No one wants to lose money, especially.
Absolutely. All right, that's it on the program for today. Thank you for watching. I'm Chimeze Obi Iwago.